The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at about this time.
The following takes place between 2 p.m. and 3 p.m.
S&P's up 35 points right now. They're almost 36 points at 2665. The Dow's up 351, 24,281. Nasdaq's up 125 at 7213. Russell's up 22 at 1568.72. Well, that's at least the last quotes. In the happy dance, we had a couple of new purchases that ended up being big winners, or at least for the last couple of days. Bought the SMHs at the lows I think I got mine at 96.20. And got out everybody out today at 100. I think we're probably going to get a little bit of a pullback, but a nice 4% pop. Where's that 5%? About 5% pop in the SMHs on the reversal. I think we could see these things go to 104. A little bit too much too soon. Yeah, it's got to be one of those things. You get kind of a relief rally, then you're going to pull back a little. Maybe 99s, 98s. I'll take another look at it, and we'll take another stab probably at it then. But a nice one-day turnaround. And I know somebody, at least some of the subscribers took the calls on that. Bill made him a cool $1,500 in less than a day, he tells me. Other things we had, a bigger, longer trade out here, and that was the NVIDIA calls. We bought NVIDIA calls, which I said buy less than $12. Actually, by the time that went out, could have bought them for $11 and down to $10. I ended up getting my own, I think, around $10.50. Anyway, we're out above $21 today. So a lot of ill-gotten gains in the newsletters, or at least in the Path of Least Resistance newsletter. Got a great opportunity to get a stock that I've been waiting for a year to come back. We got that yesterday. Doesn't mean that it's going to go to the moon, but it was one of those technology stocks that I liked. And just a bounce, not even being right that it's bottomed long term, a bounce would probably get me 40%. So pretty happy about all the action over the last 24 hours in trading. Got some good opportunities, and sell when you can, especially in options is one of those. But we went when everybody was selling NVIDIA back at 210 to 212, we were buying the 220 calls. And we're out today. And you know what? You don't always have to buy them, but if you think you're in for a short-term trade, guess what? Options are kind of the best way to limit your risk if you do it right. Options aren't there to increase your risk, i.e. because they're cheap, you buy much more and take on much more risk than you would. But we'll be having a webinar, the May 16th, and we'll be doing a little bit of a deep inside the trade with NVIDIA, and we'll talk about why I picked what I did, how we did it, how we set it up, a few more thoughts, and how I was looking for this to go to 238, which is the high of the day today, for us to go ahead and pull the trigger and get out of these. Got some new positions, too, they're going to hang on to. One's up about 5% today. So I'm just very glad that everybody was scared and nutso yesterday. I want to thank CNN. Special shout out for reporting again fake news that drove the market down, and their patrons over there at ABC who confirmed the fake news, only to have to say a little afternoon yesterday that it was fake news. So, we had a lot of things to be worried about. Impeachment was one that apparently the news was all wrong about yesterday. By the time that everybody got turned around on it, the market went back up. But special thanks there, CNN, for enriching me and my listeners. News is one of those things where you think maybe the thing to do is just figure out why and how are they lying to me? Or is this the 1 in 10 times that they're actually telling us the truth? Well, I've got a good BS detector, and maybe it's just when I see articles like this or the Intel news that I know in my heart are instantly wrong for a variety of reasons. That I know that, man, I want to be on the other side of that when the truth comes back around. As Mark Twain said, a falsehood can go around the world twice before the truth gets out the front door. And that's it. We're going to go to Larry in Cheyenne. How you doing, Larry?
Well, hey, I'm doing good. I hope you're doing well.
You bet.
Okay. I'm having a hard time resisting taking a short here in XLE. I've been studying XOM, CVX, their biggest two. And, I mean, it's got everything. So I guess my question is, what do you think? It went into that gap you like to measure things against, below 75.
I think you probably want it to retest the high of the 26th, which is what, 74.67?
Yep.
You got to get in there. The news today for the Baker Hughes drill numbers were bearish, i.e. they continue to put more people on. Everybody tells me, and it was somebody the other day said crude $300, and all I could think was peak oil again. So I do like the kind of the psychology of this. I think, though, that just like everybody who wanted to be short this week, I think you're just a little early.
Okay.
I think you have to sit on your hands, and as I always say, when I'm going to be short, I'm going to be short 3 days, 3 weeks, 3 hours, 3 months. And
but you, Dave, you agree it's just dying up here, right? I mean, when you look at
there's not a lot of volume, and when can I get this up? I'm not going to have time to do it. Will you hold through the break?
Well, I'd be glad to. Yeah. Okay.
I wanted to show you this because we've been talking about the sector oscillator that I came up with. I want to thank Basil for his help with it. But let's go ahead and start looking about buying and selling these sectors based on just the movement of the majority of the stock. We're going to do that when we come back with Larry from Cheyenne.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to go back to Larry and Cheyenne. Do we still get you?
Oh yeah, I'm here. I see a lot of bad potential here with like an oval island top. It could fake people out and go to 75.41, the 786 area, right?
Yeah, but here's what I want to show you. You watching on Tiger TV or in the den?
Oh yeah.
Okay. Here's my sector oscillator chart. Since we hit the highs, which was back around April 9th, more and more stocks have been going under the 9-day moving average.
Right.
We're now kind of negative on the group. But what's happened to the price? All it's done is gone sideways.
That's
so
right.
You're getting a pullback and nothing really other than the fact that they're not going up has happened. Okay? What this is going to do most likely is go hit one of these lows probably in the next few days. So maybe you get a pullback, but at that point it's going to say that it's ready for some kind of ABC pattern. Now my thought is so it gets back down to 72 or 1 or something like that, and then goes back up to 74, and then you've got no volume in that one, and the stocks don't follow with it. I think you'd have a much better play. One of the problems I see is that I don't think that the market has a downturn in it till late this month, at earliest after the options expiration, and probably more likely the 29th when we come back from the 3-day weekend. So overall market. Now just the XLE part of it, it's done its retracement. It's got it. I think a lot of people are going short, but just the action in it, that you've got all these stocks basically going sideways and the market's absorbing it fairly well, tells me that it's not weak quite right. Now, what'll happen normally, let's go to another chart like this so I can explain what I'm looking for. Okay. Where is the...
So, Dave, you don't consider the double repo, the DiNapoli thing, it hasn't really closed below the 3x3 price-wise yet.
No, it has not. And if we go back here and put this on it, I mean, it kind of has, but what you want is 10 or 15 days above it, a few days below it, and then a few days back above it. And it's really just kind of hovering on that line. I've got the 9-day up here on it at the moment. But what I wanted to show you was this. If that's the XLE, where's the semiconductor? Here we go. Now let me create this chart. Now here's why I bought the semis for the reversal, or one of the reasons why. Normally when everybody's selling, you get all the stocks under the 9-day in the sector, right? Then you get a couple of 2 or 3 days, and then the market starts going higher. And that's kind of what we had in the SMHs, which I'm showing now. And then, of course, you get a couple of bumps. And then my guess is when we look at these tonight, these are going to be back up in the overbought condition fairly quickly. That's why I'm thinking there's going to be a pullback tomorrow. But normally what you want to do is wait until everybody's up on the highs, and then it rolls over. It's less likely that you're going to find a high in the XLE that is worth much. Let me put it that way. Can you pull back a buck or two? I think you can. My thoughts, though, is the way that this market's lining up and the way that this is lining up, that you're going to get maybe a little small pullback, one more big push, and maybe at that $75 level, all the volume will fall out, and that's what you're looking for. But, yeah, you need some closes below either the 9-day moving average if you want to do it that way. Let's go to the displaced moving averages. You got a couple of days underneath it. You're back over it right now. So at best, you'd probably want a couple more days and then some kind of sign. But I just don't see that much instant flip on this. I could see. I mean, I think this is going to hold with the market. Let me put it that way. I would rather see the market weak and then pull the trigger on this too.
Yeah.
And I know,
David,
I know the frustration.
Cycles work, just pure, seasonal, intermediate, daily.
Yeah.
This is a big seasonal top in commodities, believe it or not. I know it doesn't make. Commodities are, in theory, by cycle work, topping here. In theory. Yeah. Yep.
No, I don't have any doubt about it. I do have a tendency, though, to tell you that you're probably, well, let me put it this way. You're far more likely to wait till after options expiration, and more likely even the 3-day weekend to get the big turn in the XLE.
That's why I'm calling. So, okay.
It could fall. The wheels could fall off tomorrow. I don't think that they are. Yeah. We've got some fairly bearish new well numbers from Baker Hughes. We got everything else. Everybody in the world's telling you to be long this thing. I love, and here's why I just didn't tell you no. On the way down from that January 24th high to the February 9th low, we came down to my power law vector indicator showed a 12. Well, we went from the low of April 2nd up to this high on April 26th with just an 8. So we're off by about 30% of the energy on this move back up that the thing had down. So I see that. The downside on the other side is that you got into this low of February 9th, 64.45 on April 2nd. You only had 19 million shares to the 35 million shares there. So you had a very good buy signal at the low.
Yeah.
Now you've got a whole lot less energy. This gap came down on 30 million shares. You hit it with 15 million shares, right? So there's a lot out here that says trade range to me, not the wheels fall off the wagon. And in trading ranges, you tend to hang up at the highs a lot longer than you think you would. But none of us know the future.
Yeah.
But I would say you're better off always sitting on your hands and waiting for the good short. It is rarely that you are late to shorting a stock. It's almost always early, or a sector. And to me, there is the weakness that I want to see yet.
Yeah.
My guess is that you could get up into that gap. Let's say we go into the, whatever it's going to be, the 26th, that Friday. And all week, energy just kind of goes up a little bit on light volume, right? Squeezes all the shorts out, just like we saw in the market yesterday. We ran all the weak-handed longs out. You want to the weak-handed longs. You want to get out all the weak-handed shorts, especially in energy or gold. Yeah. These things tend to always have some kind of spike that sets up at that end. And I'm still waiting. Huh?
Dave, just remember what Yogi Berra said. The hardest thing about telling the future is it hasn't happened yet.
I thank you for the call.
All right, bye-bye.
Bye.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we have a request to take a look at Snap out here. Of course, it blew apart on earnings, down on 158 million shares 2 days ago. Yesterday, 67 million shares. Today, 28.3 million shares. And one of the things you really need to look at on shorts or longs are especially people on margin. You want to give it 3 days before you really start piling back in on a winner, because that's generally when the shorts cover. But we still have somebody there? Nah, just heard some feedback. Okay, anyway, you got 3 days out here to the side. That makes a good indication. If you got anybody that's going to sell, you know, if they don't sell before the end of the day, you're talking pretty strong hands. So normally you get kind of a bounce out of this thing. Now, what you really want this thing to do, if you want to make some money on it, get back up to 1450, is have this thing go sideways for a week or two, and then see it kind of come back up to that $14 level. Were the earnings that bad? Don't think so. Frankly, a lot of people were just piling on the short wagon and beating stocks up because they could. Was it great? No. Was it bad? No. But you got a monstrous short position in this, any kind of good news, and you could see it instantly back up to 14.50 and maybe even up to the 17 buck range. But I don't know. A lot of these social media companies are just kind of damaged goods, and that's generally a good time to start looking at them. But finding a bottom, a tradable bottom, is tough. But my guess is that you get a good 50-cent bounce on this on Monday, just because, guess what? If you had the stomach to hold it till today, are you selling Monday? You're probably not. And that's kind of what's all about. What else do we have going on here? Go back and check a few of my emails. You can, of course, always email me at path@tfnn.com. You can also call me at 877-927-6648. And, of course, put a message in the den. And that would be it. Invest in a short covering pop. Okay, everybody's having their fun. Anyway, we got 6 minutes into this segment. So we'll talk a little bit more about what's going on. Apple, of course, out here at its highs. We've got Mr. Buffett pimping his stock out here today. And, of course, saying that he bought another 75 million shares. And the only thing I can think is he bought 75 million shares and the stock didn't go to 250. That was quite something. And, of course, it's not exactly sure where he bought it, but apparently you got to think it was in this 160 range, right, where it was starting to find support. Got down to 160. Bought a lot. You know, the thing does 60 million or 40 million shares a day. So if he went on the right day and was the whole buyer on this thing, maybe he's in at 165 in this tranche. I know he bought a bunch at 125. Now, on the flip side of this, he said sayonara to IBM. And it opened lower and bounced a little bit, probably on the fact that he's done selling. And he's out of it. We've been knowing that he's going to be selling. 144.40 is the level you want this thing to close back above to put in a floor. What do we have? 144.29. So you're still about 10 or 15 cents in this. I don't know if they've got anything. They're probably 6 months away from really turning around any kind of profit making. I would say that maybe in the fall I'd look at this again and think maybe their new quantum computers, maybe some of the other stuff that they have in artificial intelligence has got some traction. Up to this point, they haven't gotten any, but it does kind of look like maybe it's made a low here, just on the fact that Buffett's done selling, and maybe some of that selling pressure is off. As we go into next week, we're looking at Amazon. It got back up to 1638, blew away its high, did so on twice the volume. So 1638 is still the target out here in the in Amazon. Now that did come pretty much down on a sell, but my guess is you're going to see that 1638 retested at least one more time, and I mean pretty quick, probably. I'm going to say before the 18th, you're going to see 1638. And if it's up on light volume and you are bearish, that's exactly what you want, not to short Amazon per se, because I still don't think you want to do it. But if you get up there with light volume and then you start seeing other stocks up there, you know, some of these stocks have been just rock steady, like Intel. Even in the worst part, you know, these things sold off at the highs, but they had high volume highs. And I think you get those both in Amazon and Intel retested. 55.79 for Intel, it would be the high, and I think it certainly could go to 55, 56 bucks for the monthly expiration on the 18th. Got a question in here. Bought some Microsoft at about 92.50 yesterday. I think it will pull back Monday too. Yeah, but not that much. I think that the weakest stocks are the ones that ran the most. So you got a stock that bounced $5-10 today. You're probably going to get a little bit of pullback on Monday. You know, this thing bounced $1, so you pull back 25 cents. So to me, the question is, you know, if you had these huge winners, I'm taking money because I think they're going to pull back significantly. But if you're talking about a stock that bounced $1 or $1.50, like Microsoft, I mean, this isn't a big deal. This thing's just going sideways. Buying the low yesterday, or almost the tick low yesterday, you know, just a nice trade out here. Don't know where you're looking for this to go. Of course, the target would always be 100 or 101 bucks on this, but I think you're good on that. I haven't checked the options on Microsoft. Let me do so right now. There's Microsoft draw options curve. Okay. Yeah, this says somewhere around 98 right now, but it could drift right up to 100. But right now we're showing probably the resistance level on Microsoft coming out at somewhere around 98. So my guess is, at least on today's data, actually yesterday's data, Microsoft would be saying that it wants to expire at that 97.50 expiration price. So kind of a long time to wait for $2. And that's why I don't trade Microsoft or a lot of these other stocks, or just kind of stay away from them. They move the market, but they don't move fast enough for me. I've got a short attention span, so we've got to look at that. Okay, what else do we have? Okay, what else do we have? Well, we're going to break here. Give me a call. It's a quiet day. We're going to do the Tech Insider in Tom O'Brien's hour next hour. And guess what? It's a very special Tech Insider hour because there's going to be 50% more me in it. 50% more. It's not like orange juice. It's like 10% orange juice and you get 20% orange juice. You get 100% me next hour. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, I'm giving you a peek behind the curtains because I was looking at this today, which is the XLF, and you're into a fairly decent buying opportunity, I suspect. But guess what? I have a little indicator out here that says what the market tends to be doing about 2 or 3 days ahead of time, sometimes as much as 4. And I've learned very much to watch my sector sector oscillators at lows. What you will see back here last time is what I suspect will happen again. That is, you're going to get some kind of bounce, but it's going to be fairly minor. Back when this thing was auguring into the lows on the 23rd, 22nd, 23rd through April 1st, down here where my mouse is showing, before it started going higher, but it only went a buck higher, and now it's back down again. You didn't have much energy in the upside, but you've got a couple of nice lows out here that are half when you look at the half. But what I'm going to say is that before the next move higher, you're going to get something like what you saw down here that I'm showing, which is you're going to get a lot of kind of sideways action, one more push lower. But that's normally 2 or 3 days. So my thought is that if the XLF is going to do something, it's probably going to be Wednesday, and that's the start of options expiration. And when we're looking just at the chart looks pretty good. Could have been a little less energy on this way down from the April 13th high. You got 2 tests of the high volume low, which is the February 9th low, 2676, that had 150 million shares. Got into it with 74 million shares on April 2nd. Got spiked it yesterday with 68 million shares. So you got 2 tests with lighter volume. So I do like it. Now here's the one thing that is the problem with the XLF, and that is the inverted yield curve. Not quite inverted yet, but you're going to need some spread to get any of these financials moving. And I didn't check it today, but maybe you can tell me. It says the top of my chart is cutting off. Don't think so. It should look just fine. Let's do this. No, don't want to do that. Want to do this. Okay. And let's do this. And we'll start my chart again. I think I want to start my chart again. Is it there? Did I close it? Yeah, I closed it. Okay. So I need to get this back up again. Where is it at? Okay. There it is. Okay. So hopefully you should be seeing my whole chart here. Don't know why it would be looking different. Okay. Just the XLF chart. Okay. No different than this one. Just filling the screen with it. Okay. What do we have? We've got that bounce on 30 million shares today, but we were down on 68 million shares. Look for this thing to go sideways for a couple of days. And I would say that you're going to get some decent money out of this, but you've got to see that yield curve start to move apart. I think as long as that yield curve's low, the XLF isn't going to get much of a bounce. I do like that this has made a bottom. I would like to hear the argument that there's a lot of money in the XLF, and that argument all comes back to the same thing every time I've heard it for the last few months, and that is the yield curve's getting narrower. It's not expanding, and that is a problem for the XLF. Okay, good, looks good. Okay, anything else? Got any other questions? Let's go back and check the mail. Let's see if I've got anything in there. Okay. A lot of questions on the XLF, which I just answered. We got Microsoft. Got a question on Fakebook. I don't think this changed since I talked about it yesterday. My guess is this thing's going to 180 or 185 over the next week. And that would be the setup if the volume remains low to probably pull the trigger. So, but again, I think we could see, I mean, just looking at options, I think we could see a very slow market for the next few weeks. And I mean, reduced volatility, S&P swings more like 15 points a day, top to bottom, instead of the 30 or 40. I suspect if you want to be bearish, let me put it this way, going into Memorial Day or even just later this month, what you want is the volume to decrease and the market to squeeze out all the weak hands that are there in the shorts, and be a market that is as bullish on the surface as it was in January. I said a couple of times this week, this market was as bearish as the market it was bullish in late January. Now we're probably going to take off some of that, but it takes a while for those people to get that kind of bearish stink off of them. They'll want to short these things again. The market goes back up. You don't have people shorting the market. That is when the wheels fall off the wagon. Not when everybody's shorting it. It's when they don't short it that you see these huge gaps down. The reason, if they're short, as soon as it starts moving down, some of the shorts that are willing to take less money are going to be there, and they slow that movement down. If there's nobody to catch the falling knife, it just keeps falling. And that's where those big moves down happen. And unfortunately, everybody's, I think, bought into the hype and hysteria from cable news on a variety of fronts, from the financial infotainment, with everybody calling for the end of the world. And I know a lot of people say that they don't listen to the news. I just figure out how I can go opposite of what they're saying. Maybe that's people call me the counterculture trader, but I just wonder a lot about how they do it. And right now, there's still that kind of tinge of that. Now, when they all think that the market's beautiful and it can only go higher, like January, I think that's it. I think we're going to get it. I think that everybody's going to lay off these bears, the bear talk for a little bit. Everybody's going to see the sun shining. And if at that point the bears quit shorting, that's probably a good time to set the hook. If everybody's still bearish, we're probably going higher. Run for your lives. I love it. Yeah, I think you could see these things bounce. Now, can you give me the argument? John in the den is asking me about these. Give me the argument for the yield curves not collapsing more, but actually starting to go back to the way they should be. And that is what I think you really need to get those things going. Will you get a bounce? Yes. Will it be a bounce that you retire on? Not until those yield curves quit inverting. And they shouldn't do that. If their parents treated them correctly, they would have been well-mannered. They wouldn't have been those inverting kind. Anyway, you still got plenty of time to give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, put a message in the den.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Well, we've got, I wanted to take a quick look at the indexes again. Up 39 points on the S&P cash. Dow's up 30, Dow's up 30. Dow's 391.25 higher. Dow 30, 391 higher. NASDAQ up 135. The Russell's up 25. And, of course, you get everybody on one side of the boat. You get them all hot and lathered. And what do? You just take them to the cleaners. We talked about how the put-call ratio was wildly skewed. The people that were buying the VIX were betting it was going much higher. At the same time, everybody that owned an equity was buying puts in case their stock went lower. A pretty good indication that there was a lot of bipolarism. That's not B-U-Y, P-O-L-R, as some people have said, but B-I-P-O-L-A-R. ism in the market. And, you know, you get that schism, you get some news out there that's highly questionable to scare everybody. You set a low and then you move back up. Nothing's really changed. The market, or at least option market makers, have continued to kind of taken a look. I still thought that 2,700 is where we're headed. It's not that much higher. We could bounce around between 2,650 and 2,670 all next week. I would not surprise me a bit. The high end is not that high, and the low end is not that low. After making a huge mess on Wednesday of options, yesterday they kind of snapped back to the way they were on Tuesday and are showing that maybe 2,700 for expiration. So I still think the day trader mentality is probably going to be the bigger paycheck. That's why I took the quick money on the SMHs today. Maybe I took them a little early, but my guess is all the weak hands in the shorts are out. So we're going to see what happens on Monday and look a little forward. Still have long positions, still like them. Stay tuned because it's me and Tommy O'Brien, I think, or Andy Heck in the next hour. We'll be back in a minute.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.